We are in the holiday spirit here on Fast Money and wanted to put a spin on one of our favorite games. So instead of so bad, it's good, we're playing a round of so naughty, it's nice. Our traders are looking at a couple of troublemaking names they think deserve better than a lump of coal in their stockings. And the chart master is playing Santa Claus to deliver the final decision. No costume, though. Tim, you're going to start with...
I'm going to start with gold.
Gold.
Yeah, and it was almost came up earlier, and it seemed like we couldn't talk about it, so I strangely shut up, which I rarely do. But in gold's case, this is a case where if any environment should have been great for gold, it was one where you had inflation, where you had this dynamic, except for gold was death. And if you look at that chart, especially in a world where you actually had a couple conditions where gold should have been working, but we've started to get that move higher in gold. I think if the Fed is truly at least vanquished inflation in terms of the concept of its worst, this is the environment for gold, a world where we have slow growth. That's the status quo for 23, and that's an environment where gold really works, even against cash, which now is worth something. So stay in this trade, and I think if the higher beta part of this trade are the gold miners, which will outperform the underlying metal.
So we know already, Carter, that you like gold in this environment. What do you see in the charts?
Right, so I do, but let's do it anyway. Here we go. So what do we know? Well, first of all, what we know, and this is always fun, right? A trend line or something, it doesn't matter what, keeps on responding to that line and then moves above it is a change in trend. So what do we have first? We have a triple bottom that's very well defined, which means this gets a nice green arrow. Now, if we were to draw the lines another way, take a look. Let's do the exact same chart. And you also can do this, a massive head and shoulders bottom, which means another green arrow. I'm with you, Tim.
Right on.
All right, let's move on here. Courtney here has flagged DR Horton. She's put it on the nice list. Courtney, why?
Yeah, I do think housing has gotten hit really hard, especially with interest rates being a lot higher this year. And even when they're starting to come down, I mean, a lot of those home buyers aren't there. And so you're really not seeing a lot of the optimism coming through. But I really like the valuation here. It trades at less than 9 times earnings. When you just look at the supply-demand issue, I mean, there was about 5 million more households created over the last decade than homes built. And that is a problem that is not going away anytime in the near future. Specifically, I like DR Horton because about 85% of their home sales are 400,000 and under, which is going to get those millennials and their first-time home buyers. And I think that's a idea that's only going to continue, especially if interest rates start to come down here, which we do think they will.
Okay, so Carter, naughty or nice in your view?
It's awfully nice. Let's figure it out together.
Awfully nice.
What do we know?
Yeah.
So if we can measure trend in many ways, one way to measure trend is use a moving average. The 150-day moving average is now rising. We also know, of course, that it makes a low in June. And does it make a low the way stock market does in October? No. So the relative performance is tremendous. So one way to draw the lines is that. Let's look at another iteration. And this is the same chart on top, but now we're looking at the relative performance. So the key is this, that if I do this, yes, what we know is that it's been going up absolute, but look what I can also do. The relative low was actually back in April. And so even as Horton was going down, it's starting to outperform the S&P, and the group is fantastic.
The group is fantastic. Wow. All right, Karen,
yes.
You've got Amazon here. What do you see?
I do. So it's not so apparent on the surface, but Amazon, we talk about how much is the retail business worth? Is it maybe even negative? But think about the amount of spend that they have been putting, tens of billions of dollars, tens of billions, that they could slow down. They don't really care about the short-term stock price, but I think they're going to turn that spend down. We've already seen it a little bit, which will make their retail business far more profitable than it's been, which is not, and I think that will change the tide of Amazon.
All right, Carter, naughty or nice here?
Naughty. It's,
I knew it
You
was.
naughty girl.
It's at a 52-week low. That alone is a problem.
Sorry.
I feel like we need a sound effect. All right, up